Welcome traders to this week's analysis of gold XAUUSD. Thanks for joining me here. My name is Vic. I'm going to start looking into the daily time frame. The reason behind that is because not much has changed since last week. The week before, we saw this huge fall, which fell right into this previous demand zone, and this in turn created this M pattern. And when M pattern completes, the market is supposed to go up. So I started to go higher, and I covered that in the last week's analysis. So if you are interested, go and check it out. So the market actually started to go higher on the completion of that M pattern, and it reached its profit targets. Two profit targets were there, and the second profit target was around here, and it reached that. Now, this profit target, this particular area, is nicely confluencing with previous structure here, which is the midpoint of this M pattern also. Now, obviously, there was some kind of resistance or some kind of blockage was expected, and the market tried to struggle. It wanted to go beyond it. It tried, but then failed, and then tried again, failed. So right now, if we just pay attention to what we have on in this area, this is basically a sideways movement which is going on right now. So we are looking for a breakout from this level. So in which direction it is going to break out, that you cannot be 100% sure of, but you can have some inclinations, you can have some biases. So if you are one of those traders who are always trying to look for a reaction, so you will be looking for a breakout above this particular line, and then you will look for a confirmation to go to the upside. If you're looking for a downward movement, then you'll be looking for a breakout to the downside. But if you know how to trade WNM patterns, and if you are also trading smaller time frames such as 5 minutes, 15 minutes, 1 hour time frame, or even 4 hour time frame, then this can actually lead to a lot of opportunities within this range as well. So it depends on what kind of trading you want to do and what kind of strategy you are employing. In our FCB methodology, we are making use of this consolidation, and we, as soon as we find a chance to go for a breakout, we will do that as well. If I go to the 4 hour time frame, you see there is a lot of choppiness around here, and that choppiness is a very good trading area for WNM patterns. You will notice that a lot of WNM patterns are here. If you're not able to spot them, let me actually show you what I mean. So this is a W pattern, and then we have an M pattern, then we have a W pattern, and then we have an M pattern, which is like this. And then once we have that, we have a W pattern, and then we had an M pattern which was not valid, but in turn we had a W, then we had an M pattern. So if you know how to trade all of them, and if you know how to follow that strategy, you can play them all the time. You do not have to wait for a breakout or a sense of direction in the market. um, by the way, this is also looking kind of like channel which is going downwards. So this is kind of a correction on the previous impulse. What I mean by that is, if I go back, sorry, not this, let me just clean it up. Okay, if I go back and show you the 4 hour time frame, we had this huge impulse that the market created. So this is actually an impulse which used to be a correction on the previous one, and now we have this sort of flag which is appearing on here. So we are looking with, so this is basically a correction on the previous impulse. Now what we expect is that market can actually go upwards, and this is what I covered in the previous analysis. But as always, we should always look for um, like you know all the possible movements in both directions, because that's how we can prepare our trading plan. We can just say, okay, if the market starts to go higher and if we get a confirmation, I'll play like this. If the market starts to go down and if I get a confirmation, then I'll play like this, and these will be my targets and all that. So you do not have to have a strict bias in the market. You can just play with the market. You can play with your trading plan, but for that you need to assess all the possibilities. So that's what we are going to do, and that's the part of our FCP methodology as well. So let's go back and look at the daily time frame. On daily time frame, what we see is that this is consolidation. This is what we were just talking about. Now if I go to 4 hours once again, and I will show you this structure here, there is a good M pattern which is forming right now. So if the market actually breaks through this mid level, then we are looking for something around here or maybe around here. These levels are going to be the profit target levels if the market starts to go down. So that's a possibility. In the previous analysis, I mentioned that this price action is not looking very good. This needs to be cleared. That's why I still think that gold can have a bullish movement at some point in time. So personally, I'll be looking for anything which is breaking out above this to target this price action area, and even beyond that. There is another bullish scenario left in gold, and that is around here. As I mentioned before, there are two gaps left, two price gaps left around 1865 and 1880 level or something. So if the market starts to go higher than that, these are the two bullish scenarios left in gold. Gold right now on multi-month basis, multi-week basis, I'm still bearish on that for now. A multi-year basis, I'm bullish. On multi-week or multi-month basis, I'm bearish, and I'll show you why I'm biased like that. But these are the two cases where which can actually make the gold bullish for some time. Once they have been closed, you should be looking for bearish opportunities furthermore. My inclination right now is towards the bear side, and the reason behind that is if I go to what I envisage. If I go to weekly time frame, you see this is bearish right now. Everything is red. This is red. This is red. And so that means on multi-week basis, it is still bearish. And I know that this target is still open. This is the signal which was given to us, and this target is still open. So on multi-week basis, it can come down even below this previous structure level. It can come down to collect this to reach this profit target. That's why I'll be favoring short positions more. Even if the gold goes higher, even if it goes to 1880 level, I'll be favoring my short positions far more. I will only favor long positions on multi-week basis once it has broken through this particular structure. Until then, this is still bearish. Another way of reading that is something like this. You can see the market is creating this wave sort of structure here. So this is the equal one. This is the equal lows you can see, and the market may actually come back down to collect stop losses here because there is a lot of liquidity which will be present below this now. So even if it goes up, I'll be looking for short position, and I'll be looking for extended profit targets on multi-week basis. If I go to daily time frame, on daily time frame we had this um, signal here. Everything is looking bullish for now, but you see we have started to consolidate here, and we never reached the water curve here, and we never reached the profit target. So that is why I'm saying, like, it may have a little bit of bullish movement here, or that bullish movement can actually go beyond this to collect this profit target and close those price caps as well. But in that process, I'll be looking for a short position, because in that process it will create a W pattern, and that will give me a good level to short from. If I go to the 4 hour time frame, then what we have is that market is consolidating, and these profit targets are still available. You see, when we get a signal like this, the first profit target is the touch of water curve, which has not happened yet, and the second one is these white dots. None of this has happened, and the market is creating a structure. It's a sideways structure. So I'm expecting that it can actually fall down to, like, maybe around this level here. This particular level is near about 1768, 1766 level or so, and it can go back up. So we'll have to see how it actually plays out on 4 hour time frame. Let me actually show you another aspect of gold. So let's clear this up. Okay, on here, not many of you are actually using FCP methodology, so let me actually show you a different way of looking at it, using the trend lines and other stuff. So if I draw Fibonacci, trend line from here to here, let's quickly remove this. So we have a trend line here. We also have this previous structure area here, and we also have this structure level here. Okay, so you see, gold has a lot of structure levels, a lot of barriers for it to actually cross to become bullish and go to 1880 level. I'm not saying that it cannot happen. It can happen, and in fact, if gold starts to pick up momentum, then it can go through this level very easily. But you see, these levels, these barriers are going to cause obstruction. Like, it is not going to let gold become bullish very easily. So there is a chance that it can fall down a little bit, or it can fall down even further, and ultimately that gap will get filled at some point in time. It may take months even. Another way of looking at it is, if I go to the 4 hour time frame, is, as I said, this is kind of a channel as well, or you can say it's a flag. It depends on how you interpret it, because these are all subjective. So we have something like this that's happening right now. So we can expect a breakout very soon. Now you'll have to plan whether you want to go short. If it gives you confirmation to the downside, then you'll look for a short position and your profit targets will be at some level. If you're looking for a confirmation to the upside, and if it breaks to the upside, then you're looking for this area to be invalidated first, this price action to be invalidated first, and this trend line will be your first profit target, because it can have a potential to push the price down. And then after that, you'll be looking for this profit target, followed by that those gaps that I was talking about. Okay, so these are the levels. Now let's look at the original analysis and what happened. So remember, in our Telegram group as well, I mentioned that the market was reaching an FCP zone. This is structure zone and FCP zone. So we were expecting market to create some kind of reaction here. So market reacted to that FCP zone. It tried to go above it, never did. Tried again, tried 3 times, 4 times. So that means this FCP zone is not letting the price go, and that is what I meant just now. Like, gold can be bullish, but it will have a, like, hard time going up there. So unless we see a good confirmation above this FCP zone, um, I personally will not be looking for a bull, a bullish scenario or long position in this market. These levels are still valid. So if gold starts to go down, then you can treat these levels as your potential profit targets, or you can also call them as support levels. So this is my analysis on gold. Hope you enjoyed this analysis. If you found this useful, make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities. And I'll see you in the next one. Have a great trading week next week.